All right. So this video is just gonna be me coming at you guys with a daily bias, a daily, daily trade breakdown. And I'm gonna tell like kind of show you guys how to take how to know to take a trade in the market, like if it's going to end up going the way you want it to go. So today is Friday, November 22nd, 2024. Um, and uh, took two trades today. I took one on my funded account, and I took I took two on my paper trade account. Um, so this is my paper trade account. And then this is the trade I took on my paper trade and my funded account. Ended up being a sniper entry trade on the 15 minute. And then this one kind of was just like, I don't know what I was doing there, but um, as you can see, the reason why. What time was this? 9:30. Okay. So, what I usually look for when market opens around 9:30 is usually there will be a liquidity sweep in the market, whether that be later, like around 10:30, but there always is going to be a kind of a nice liquidity sweep, at least when I looked at it. So you see this over here is a previous drawn liquidity, right? And you see it perfect, retracement off of this liquidity, grabbed all those orders and went straight up, right? So that gave me my bias for the day because of that sweep. That sweep's going up, so bias was going to be bullish for the day. Another, kind of like I was looking for was for this fair value gap to get invalidated initially, and it did. It got invalidated, right? And we also broke above these highs, retested down, and that's when we broke above these highs. I kind of was looking for that retracement. Like I wanted the retracement, and then wanted to keep going, which it did, right? Um, Again, I guess we can go. I think that was the whole buy that gave me my whole bias. It was like around 9:30. I saw this happen. I didn't take a trade because I was late into the trade, and I didn't see any good looks. So like this is a good example of what not to do in the market. A good example of what not to do in the market, right? If you see a sweep and it's going to go up, right? Don't please do not just get in to get in, right? Please wait for a fair value gap, wait for order block, wait for an equilibrium to get hit because it's going to just help you understand the markets. I mean, you could just enter a trade and hit, a good trade, but when you're going to go back and analyze the trade, you didn't really take it off anything. You just like took it because you knew it was going to go up. You took it to take it, right? You just wanted to initially make money, right? You wanted just that, satisfaction, right? But you could have just waited for a fair value gap to get hit. For example, you could have looked at the sweep. Okay, my bias is bullish, right? Let me wait for fair value gap. And a good example of a fair value gap, right, is right here. What does it do? It gets tapped right into the fair value gap. And what does it do after that? It goes straight up. And I don't know why this order didn't go, but looks like I took it off the fair value gap. I don't know what happened there. Today, on at least paper trade, my funded account wasn't acting up, but paper trade was entering me crazy positions. I don't know. It's all weird. But for the trade, took it on the 15 minute. Initially on the 15 minute, as you can see. I'll go into the replay mode. I don't know why this isn't full screen. Okay, there it goes. Let's go into the replay mode. Okay. So I think it was around 11 when I started looking at, or no, yeah, it was 11. Okay. So saw this fair value gap, right? And then saw this come back down into here and disrespect this bearish fair value gap and to create this bullish fair value gap. So I'm gonna initially, when I see this, wait until it comes back down to the fair value gap, to get a good entry, get a better entry. See right there, boom, right? I can't get right down in there because replay mode is kind of weird, but we're gonna enter off this, right? Stops below, for a little below the fair value gap, and take profit will be like what? I think my take profit was around 1600, somewhere around above these highs. Yeah, it was like 1500. Good. Okay. And it was like 500. I risked 500. Yeah, so it was like right below this here. Okay. So I just wait, right? I waited the trade out. Literally forgot about the trade because I knew it was going to hit, right? I was really confident in this trade. Let's pause this real quick. Right. I didn't really have any, like, the equilibrium really didn't get hit here. Like, as you can see, if you go to the equilibrium, like, it's all the way down there. But again, I knew it was going to hit. Didn't really have a problem with it. There's break of structure here, and then there's that retracement after that break of structure. Also gave me a good understanding of where price was going to go. So totally forgot about it, right? Went back into my funded account. Almost thought I lost it for a second because I thought I lost a trade because arrows were looking weird. But as you can see, crazy trade there. Went to go to the 5 minute. See that's a nice trade. It's a beautiful trade. I was pretty proud of myself today because I definitely could have just got in down by the sweep, right? But and you can see here 1 minute swept liquidity. You could even went to the 1 minute and looked for the sweep of liquidity and just but I was on the. I don't really trade on the 1 minute, me personally, just because it's very back and forth. I don't know, sketchy, me personally, right? But today there was a nice liquidity sweep, and yeah, that led me to my bias. Yesterday was nice too. Good. Well, it was a good. It's been bullish for a while now. I've been taking buys. I took a sell, I think, a couple of days ago, off of a fair value. Not a fair value gap, off of a liquidity sweep. But other than that, I've just been taking buys. Okay. So, I'm gonna tell you guys how to take a trade in the market, right? Me personally, I would go and watch TJR's boot camp before you even start trading, right? Make sure you know the fundamentals. He teaches fair value gaps, breaker structures, order blocks, and all of that. So make sure you guys have that down, like inverse fair value gaps, all that, right? Inverse fair value gaps are so nice as well. But to take a trade, you need to incorporate all of those into your head at that moment, right? Did a fair value gap get hit? Did it align with the daily bias? And that's a big thing, right? If you if you have a bullish market structure, let's draw this out real quick. If you have a bullish market structure, you're looking for sells. Your sell positions are short. I don't know what you're doing. It's like all this right here. It's a bullish market structure, right? And if that is on the 4-hour chart, what are you thinking, right? It's going to be going up for a long time because that's the higher time frame. I mean, if you wanted to short these retracements, you could, but there's no point, right? If your bias is bullish, look for longs, right? Look for retracement, continuation confluences like fair value gaps, order blocks. all that inverse fair value gaps, breaker blocks, all that. So when you're in a retracement, look for those, right? As you can see, I took this, right? It's a bullish market structure. It retraced and I took, right? Initially, just comes down into a little bit of a discount, right? That's just retracing. But it's the difference between a retracement and a break of structure is this. So this is just a nice market structure, and these are retracements. These little higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then a break of structure would be this getting broken to make a lower low. So it just breaks below that higher low and starts, going downwards, right? And then you can sort of work your way into kind of that other mindset, maybe where maybe it's bearish now, but make sure, all I'm trying to say is make sure you are aligned with your daily bias, because it's not going to help if you're looking for longs in a bearish market, or vice versa if you're going to look for shorts in a bearish, in a bullish market structure. So that's how you're going to take a trade, right? Off of your bias, right? And the third thing you want, okay, so it's 3 steps. First, use what you've learned. 2, I'll write this out so you guys can visually see it. Okay, so there's 3 steps for me personally. I always ask myself these steps, or these things. Does my position line, why did I spell it? Position line up with my bias? All right, I want to take longs on the bullish bias. I want to take shorts on the bearish bias. 2, did I use my confluences? Let's see. And then 3, did price react to those confluences? Okay, these are the 3 things you want to take in, and you want to ask yourself. Okay, that's how I take my trades. That's how I'm somewhat profitable. I take losing trades here and there, but I take 2 trades a day. So if I take 2 trades a day and I lose both of them, right, I look back and see what I did wrong. And most of the time, what I do wrong is I go against my daily bias, which is a big problem, right? Don't go against your daily bias unless you have you just know you're going to hit the trade. So, just please ask yourself these before you're going to trade. That is what I do to take a trade. That's what helps me. Yeah, that's gonna wrap up the video for today. That was the trade recap, how I took it, what led me to take it, the bias, and then let you guys in on some of the stuff I use.